Welcome everybody, SF Live on site. We're here at the One-to-One Mining Conference in Las Vegas, and I'm joined by Brien Lundin, Jefferson Financial, the Gold Newsletter, and of course the New Orleans Investment Conference.
That's it.
One of the premier events in North America.
Yep.
And I missed it last year due to a immigration COVID issue. So
I remember that. You were on your way down. Yeah.
I was at the airport.
Yeah, that's right. I remember that. Well, we had a lot of companies had to cancel at virtually the last minute because Omicron was just starting at the time, and actually at the time I think it was Delta, but regardless, they didn't want to risk getting a positive test and having to quarantine in the old U.S. for two weeks.
Hanging out in New Orleans for 2 weeks.
Yeah. I was like, well, what's the problem?
So I was asking myself the same thing, but for me, I was in Europe before, so
and you couldn't even get
in. I wasn't even worried about that. So,
but it's a great show.
It always is.
Yeah.
Like, you got always great speakers. So appreciate you taking the time here, taking it away from your lunch break.
So. Yeah, if you hear my stomach grumbling, you can take that out.
Yeah, we got the microphone purposely a little higher.
You can take that out in post-production, right? Okay.
No, we'll enhance it.
Okay, good. Thank you for that.
Perfect. Brien, we got to talk about gold.
Yeah.
And lots been happening since we last spoke. You've been on the program a couple times. We've had you on at SF Online. Gold is up today, 1935 last checked.
Yeah.
You put out a couple interesting newsletters with two interesting topics. One is there's a bit of a gold squeeze going on, and the other one is buy the dip in gold.
Yeah.
Let's start with the gold squeeze.
Yeah.
Really curious, like what that actually means. And we've seen the silver squeeze last year.
Yeah.
On the physical side, are we seeing something like that on the gold side now?
We're seeing the beginnings of it. It still isn't to the big story is actually another silver squeeze going on right now in physical. If somebody wants to go buy physical silver right now, they're paying tremendous premiums. And, it doesn't do anybody any good now, but the best advice I can give is to have bought silver last year, kind of a thing, before what we're seeing now happens. It goes for gold right now because we're starting to see premiums rise. It's not quite to the extent as it is in silver, because in silver, the cost of manufacturing a coin or a bar is a much greater percentage of the value of that bullion. Not quite so much in gold, but premiums are rising in gold, and that window is kind of closing if you want to get physical product. It's getting harder to get, and you don't quite have the selection that you had. So kind of an advance warning in gold that you really
what is driving that demand now, and where is that, or supply demand?
Retail.
Obviously we got to look at that. So it's retail.
It's the retail demand, which is rising because of the war in Ukraine, et cetera, because of inflation, because of what was an uptrend in gold and silver before we saw the situation develop in Ukraine. That is kind of running head-to-head against the Mint's inability to actually produce product. So we see this happen over and over in the retail bullion market, is that government mints, surprise, surprise, aren't good business people. Imagine that government's not being good business people. So they really can't keep up with the ebbs and flows of demand. It is a production process, so it's hard for them to, they don't like to carry inventory and things like that. So every now and then we get these surges of retail and demand that essentially just wipe out all the available physical supply.
Yeah. So,
and the people that are buying tend to hold on to it, so they're not selling back into the market.
That's why you buy gold. You don't usually buy physical to trade it.
Well,
rarely, at least as retail investors.
Yeah, people who are buying physical metals are essentially true believers, and they're strong hands, and they're buying it for the long term.
Yeah, they usually bury it in the backyard and forget about it.
Right.
So
yeah.
That makes sense. Gold squeeze, silver squeeze. Like, I don't hear much about it in the mainstream media anyway, but even on Twitter, I haven't seen much about gold squeeze or even a silver squeeze that is going on. You want to elaborate on that a little bit? Why aren't we seeing it?
Well, a lot of the people who are on financial Twitter and the like are playing the leveraged plays. They're in the ETFs and ETPs as in leveraging those investments, because they're liquid, et cetera. They're traders. The people who are buying the physical metals, by and large, they're not so much on Twitter. They're the people who are believing that the currency is going to be debased, has to be debased. All currencies have to be debased. They believe in gold and silver as money and not trading vehicles. So they are the ones that are buying the physical metals, and they're not really so much out there on social media making commentary and snarky remarks.
But even on Reddit, like Wall Street Silver is here at the event as well, like Jim Lewis. So he's benefited massively, of course, from that. But why don't we see a Wall Street Gold now? Like,
well, don't give him any ideas. Quiet. I may have that. I'm gonna go get that, claim that.
There you go.
As we get off of here, I don't know. Silver. Well, I always harken back to what my mentor in the industry, Jim Blanchard, who was kind of the original gold, but the original helped get gold legalized in the U.S. When I was a junior copywriter for him, he brought me into his office one time and said, Brien, one of the things you should know is that gold bugs are crazy. And he could say this because he was the ultimate gold and silver bug. He said, gold bugs are crazy, but silver bugs are effing nuts. and it is the natural optionality for gold. It is the speculator's gold. It moves further than gold when they are moving, in either direction, of course. But and it's cheaper, it's more achievable. So it is. The people who are involved in silver just like the fact that it is more torque than gold.
No.
And
yeah, there was
a little
no
crazier.
Yeah, there was no offsetting event, like a short squeeze on the paper side.
Right.
We haven't seen that in gold yet. So it's more on the physical. So there's less torque, I guess, in that as well.
Yeah, and whether to what extent there was really a silver squeeze is still debatable. What really moves the price of silver is not the 1 ounce gold bullion, silver bullion coins and rounds and bars and the like. It's the 1,000 ounce bars that the Sprott trusts are buying, and that's an interesting story too. If you'll hear talk from Sprott that it's getting difficult for them to source 1,000 ounce silver bars at that level. Yeah. You never see that from SLV.
Yeah.
They are much larger flows, and they never seem to have a problem finding silver. So you have to wonder if they really are finding the silver, if they're really in the market, or whether J.P. Morgan is simply just doing, moving it into their vaults and rehypothecating that silver. So
moving it from one book to the other,
right?
Maybe, right?
Yeah.
So interesting. You talked about buying the dip as well in gold, and sort of segues into that conversation.
Yeah.
Like, gold has dipped a little bit, but now we've seen some strength again. 1935 is a solid level, in my opinion, on gold.
Yeah.
And explain that, like, by the dip. Like,
I've been very encouraged by gold's behavior generally, but what we've seen is at the end of the month options expiry, particularly over the last 3 or 4 months, there's always been a sell-off at options expiry, because we've been generally in an uptrend. Yeah. So you have shorts trying to protect their positions as options getting ready to expire. Gold is a Goldilocks market. Is just big enough where enough money can be brought in to move the market enough to make a difference. So we've seen those games being played toward the end of every month. And so I came out with a piece saying that we dropped 20 some odd dollars earlier in the week, and I came out with a piece that buy the dip. It's been working, and we're going to come back. And sure enough, it has. Thankfully, or I would have some egg on my face. But yeah, it was a buying opportunity, and I think it is. The behavior of gold in this market with the situation in Ukraine, we've moved so far because of that situation. I think technically we're not really going to drop much below $1,900 when there's a resolution to that crisis. We saw a possible resolution earlier this week, and gold dipped below 1,900, but intraday popped right back above it. So I think that's supportive of that view. And when bad news doesn't derail a market, an asset, a commodity, then it's in a bull market. And I think gold's in a bull market right now.
Interesting. So where do you see gold headed? I got to ask, like, where do you see gold headed in the near term then?
Well, it depends on how you define the near term. And I've been in this business long enough to give you a price or a time, but not both. But I think $2,000 in the near term is a magnet for the price. I think it's going to take us, it's already taken us a few tries to get above that. So we've been above it and we've been below it. We'll probably oscillate around that before we get to the next big number. But at some point in this run, which I think was launched by the Fed starting its rate hikes, I think 2,500 comes into play at some point. If you look at a number of technical, the big cup and saucer that gold's traced out, there are different ways to project that, but generally the bottom of the projection started at about $2,500 to get to the next level. from a technical standpoint. I'm not a real technical analyst, but I know a lot of people who are.
Yeah.
And that seems to be where everybody's projecting it.
Fantastic. So based on your predictions, you're here at a junior mining conference, and what are you looking for? Who are you meeting with? What's the objective?
Yeah, I'm looking for good stories that should make money for my readers in a quick amount of time. I'm not really big on trying to categorize things and work top down. There are optionality plays, companies that have big resources that I think will benefit from a rising price. There are discovery plays that I like, and I'm trying to also look more into some of the other markets, some of the base metals, trying to fill out a portfolio of maybe some more base metals, maybe some more energy battery metals.
There are a couple lithium companies here as well, so that's interesting. Okay.
Yeah, I had some meetings with a few of those.
Okay, interesting. Brien, thank you so much for your time. Really appreciate it. Thanks for running us through your thesis behind what is happening right now. So,
always a pleasure.
Thanks so much. And everybody else, thanks for tuning in. SF Live, we're live here at the 121 conference in Las Vegas. And make sure to follow Brien and goldnewsletter.com and check out the New Orleans Investment Conference. I can only recommend it. Thank you so much, and we'll be back with more. Fantastic.
Thank you.